Oh man, so Jerome Powell hits out in a speech today, but not in the way you would have previously thought. Coinbase lays off 20% of their workforce as the bear market continues, but we've got a green day here for Bitcoin as we head towards a critical pattern which could provide a much needed relief rally up to that 20,000 level. In this video, I'm going to break down exactly what Jerome Powell said, what's going on at Coinbase, the price action on the Bitcoin chart, and a whole lot more. If you haven't watched my video from earlier on Toncoin, which was the original Telegram coin, make sure you check that out as well. We're going to get straight into this one because Jerome Powell came out firing this morning, but for markets, it was a little bit out of a nothing burger. So he came out with a strong stance around not being a climate policy maker. He said that the central bank is not a climate policy maker. He said we are not and will not be a climate policy maker, but we will make sure that banks know and appropriately manage the financial risks of climate change. Now, this is very important. What Jerome Powell is basically saying is, look, you can hold me to account for CPI, for jobs figures, and for the mandates that I have, but do not come at me for this other stuff. And this is important because Jerome Powell's neck is already on the line. We already have horrible inflation in the US. You have this labor market which won't soften as much as he wants it to. And he's got to resolve this issue and try to navigate a soft landing. And on top of it, you got Biden and a few political issues trying to make him the figurehead for becoming a climate policy maker. So he hits back and really throws it back in their court to say, don't get me involved. I'm focusing on CPI. I'm focusing on jobs. So from our perspective, that is good news. Markets are happy. But I'm going to share with you a piece of data which you wouldn't have thought would have moved on this news, but it has. And it's really starting to pick up my attention. I shared it with you before. I'm going to share it with you again. And that is the Fed rate monitor tool. What do you notice, guys? When you look at this, what are you seeing? We've shared this every single day pretty much. But now, 20%, that's not insignificant. 1 in 5 people in the markets here are pricing in a pause at the next meeting on February the 1st. And this is insane because 80% of the market are expecting 25 basis points, 20% are saying we're going to stay in the current target rate. And that's a big shift. And I'm trying to think, what is causing that? Because if we do not get that pause, that could cause a lot of pain. Now, one of the things which is going to further move this is Thursday's CPI reading. Again, I've covered that off. Make sure you go watch my videos. I'll link them up so you can understand exactly what we're expecting from CPI. But the expectations are large, right? The market's expecting a big fall in CPI by 0.6% on the headline yearly figure. So there's a lot of expectations, and if we get it wrong, not only can this lead to some more pain in the markets, but we could get a violent correction back down again. So yes, on the Bitcoin chart, we are forming this reversal pattern, but I don't want you guys to think this is a done conclusion. It's a lovely pattern. It's a double bottom pattern. We're working up to the next line at 17,800. Nice. Okay, volume started to come in here on the 4-hourly chart. I like it. It's good movement. We're a couple of percent now away from the neckline. And with a good CPI reading on Thursday, we're set up nicely to break through here and head towards our technical price target of 20,000. And again, if none of these technical price targets are making sense, if the chart patterns I'm sharing with you don't make sense, ijaz.uk/TA, guys, a completely free TA course. Please make sure you're taking advantage of that. A lot of you still aren't taking advantage of that, and it boggles me why you wouldn't. People are charging thousands of dollars out there for a TA course. I've put 10 years of my experience in traditional markets where I was, going through professional training with the best of the best in terms of TA. It's all for free. It's all for free. You've just got to click the link and take advantage of it. I can't make you do that. I can take you to the water. I can't make you drink. Now, in that vein, I will be working in 2023 on a few more courses for you. They will be free. I'm not going to charge $1,000 for them. Now, I'm still stuck between a few different topics. So jump into our Discord, ijaz.uk/Discord, and have your say on what topic. Do you want me to do a topic on fundamental analysis? Do you want me to do one on on-chain metrics, which is looking at MVRV, looking at Newport, looking at all these other different metrics? Do you want me to do one on creating your portfolio, managing the perfect portfolio? Do you want me to do one on managing your psychology? Let me know in the comments which topic you want. And also, the TA course, which I've linked below, will be turned into an e-Kindle book, so you can download an ebook, and also a hard copy for those of you who want to keep the chart patterns and my guide on your desk as well when you're trading. So definitely take advantage of that. Links in the description. Okay, so Bitcoin up 0.66% today. It's a Bitcoin day today. We've been monitoring Bitcoin dominance. It's having a little bit of a relief here over the last 4 hours. If I switch this to the daily chart, you can see exactly what's been happening. Powerful days to the downside as all coins have been having really good days. Today's been a day where all coins have called off. It's been a Bitcoin day. So 0.66 move on Bitcoin. all coins are moving less than that today. I mean, Phantom is flat, Ethereum is pretty much flat versus Bitcoin, very little movement on Matic, which is not moving, Avalanche is moving 3%, however, Dogecoin not moving, Cosmos is not moving, Cardano is not moving. It's a flat day today, and that makes complete sense, because if you look over at the traditional markets, you're seeing more of the same. Nasdaq completely flat, S&P completely flat, and the Dow Jones completely flat, because now people are just waiting. They had their rally yesterday, they're just waiting for Thursday, and Thursday's that much important CPI reading, and then 2 weeks later you get the FOMC meeting, which, as I've just shared, markets are expecting a pause, or at the very least, the 80% of the market is expecting just 25 basis points in terms of a rate hike. So things are really starting to get interesting. It feels like a long time ago, when it wasn't, that we were having 75 basis point rate hikes with many people expecting 100 basis points. And look how quickly things have changed. Not only have we had 50 basis points now, but the market's expecting 25 at the next one, and potential people are already starting to think we could be getting our first pause. So however you want to think about it, we're a few months away, assuming we get good CPI data and good non-farm payroll data, labor data. We're a few months away from getting that pause, however you want to see it. And that's good, that's exciting. But let's put things into perspective, right? We're still in a bear market. We're still in a recessionary period. Coinbase cuts around 20% of the workforce as crypto winter rages. And it's not just a crypto winter. Don't let the article fool you, right? It's also a financial crisis. Coinbase is not the only tech company to be laying off staff. Many have, and obviously many in crypto have, from the crypto bear market as well. So if they're going to be cutting 20% of their workforce, that's going to cost them $150 to $160 million. It's not free to lay people off. You've got to pay packages, and that continues to roar on and take an effect. Full disclosure, I hold shares of Coinbase. I think they're a good exchange. I think it's a regulated exchange, and I think they'll overall do well. I think they're doing the right thing. Any tech company right now needs to consolidate. Just like you would consolidate your portfolio as an investor, a tech company has to consolidate their team, be lean to navigate through difficult times, and then you can start to be a little bit more free with how you employ as the market rotates into a bull market. Also, an update here on the Gemini dispute between Gemini and obviously DCG with Genesis. And the Winklevoss twins calls for Barry Silbert's ouster from crypto conglomerate. Winklevoss, on behalf of Gemini, called for Silbert's removal for his involvement in the disagreement between Genesis and its creditors. This obviously follows after the open letters, which we've been covering off and reading. You can find those on Twitter to get caught up with the situation, but it's not fun, right? It's not fun that you've got this infighting between crypto people, but at the end of the day, these things have to be resolved. Let's now jump back over to take a look at the dollar index. And the dollar index is having a little bit of a rebound as well today. I wouldn't even call it that, to be honest. We've got a doji candle printing, which again, if you don't know what that means, ijaz.uk/TA, we cover what this means. You should know what this doji candle means, because it signals something here on this daily chart, and you should know what that is. Okay, so we can see that forming here. You bring out the EMA ribbon, nicely still extended to the downside, have no issues with this chart whatsoever. The dollar index is definitely trending to the downside. If we zoom out to the weekly, that's where you start to see where does the support come in for the dollar index, and it's from this exponential line. So the question really is, can we break for 100 and start working towards 99 here on the dollar index? That would be a nice meaningful move, and then thereafter, if we can flip the blue line as well, we can have a nice long downward trend on the dollar index, really starting to bring it down into a downward phase like we saw these last few times, which I've labeled up here. And every time this has happened, crypto's managed to have a nice powerful move to the upside. Let's just jump back here into the Bitcoin chart. Not that one is way too messy. Let's turn off these diagrams here. What I want to show you here is on the weekly chart. You can still see that, we don't want to get too overexcited here with the crypto movement we are seeing. Yes, I shared a chart with you that can take us to 20,000. That's roughly where my cursor is here, right? But even if you get that, that's just a relief rally. You're nowhere near flipping into a bull market until you close above your weekly EMA ribbon at 26,000, a weekly close above there. If and when we get that, as in when we get that, because obviously I think at some point we're going to get that on crypto. Once we get that, then we can start worrying about moving sideways and then getting our recovery into our next bull run. For now, we're still in bearish mode, okay? There's no denying it. You're below your EMA ribbon. You have been so for a long time. Now, things get a little bit more positive when you look at the daily chart, right? Because you've managed to close a daily candle yesterday above our EMA ribbon, only just. Well, actually, if you zoom in, technically did we? Let's look at this. Let's look at the exact number, guys. So the close on that candle was 17,177. but the EMA ribbon was at 17,180. So technically you didn't get the close, but you are getting the close today. Nice positive day. 7 hours left, actually. I shouldn't speak too soon, but it looks like we're getting a nice powerful close today above our EMA ribbon, and that's good. That finally signals a bit of a trend reversal. Can we see the volume come in? Can we hold above the EMA ribbon and build long-term momentum now to get us out of this little ditch here? Zooming even lower into the 4-hourly chart, and you can see that the recent move here, ever since we flipped our 4-hourly EMA ribbon on the 2nd of January, has been a nice big start, big strong start to the year, right? You can see what's happened here. Bounce off our EMA ribbon, nice move. Consolidate into the EMA ribbon, nice move. Consolidate again, nice move. And now we're going for a little bit of consolidation, but look how overextended we are. Do not be surprised if it needs to come down to collect some support. Now, obviously, we're roaring into an important CPI reading. So if I come back to this chart, which we're monitoring, let's just bring that back into frame on the daily chart. Let's turn off the EMA ribbon. We're running into this resistance level at the neckline. So we've got to be very, very careful. CPI, if it shocks us, if we miss expectations, we could be getting sent back down to the bottom here at the levels back into the 16,000s, right? So sitting at 17,300, things are feeling a little bit better. Fear and greed index sitting here at 26. We're now out of the extreme fear category into just the fear category. So you're starting to see the market's getting a little bit of a footing, but you've got to be very, very careful. We're trading on fine line. There's still a lot going on. You can see companies are laying people off. You can see that we're still in a little bit of a tricky situation. We're relying on the CPI reading to be positive. We need the labor market to show some signs of softening, and then we can start talking about this pause in interest rates, which would allow markets to get some footing again. Hope you guys enjoyed this video. If you appreciate this type of content, smash up the likes. Don't forget to subscribe. Don't forget to go check out my video here, and I'll see you in the next one.